Alright guys, can you hear me? Let me know if you could hear me. So this morning was pretty volatile, and I was expecting that. I was gonna make a video last night, but things came up. So in the private group, I've been short numerous things. I don't exactly go short, I just buy inverse ETFs. Sometimes I short. Alright, cool. Looking at the Dow. By the way, Tesla. I've been short Tesla for a few weeks now. And it's dumping. The Model Y it's not impressing people. And not just that, there's a whole you can make a documentary on Elon Musk. His tweet, if you guys remember that, when he said that he was gonna bring Tesla private and he had funding secured. That's blatant fraud. It's hilarious. And then him and Kramer were going at it last week, I believe Friday. Anyways, let's get to the markets. That's for the private members. So here's the Dow Jones. Here's the daily chart. It's on support right now. I believe it's on the 100-day moving average. And it could break down. Looks like it's ready to break down. Gold is confirming that as well. A possible sell-off. If I could find the chart. So here's gold. And it's continuing its rebound. And it's way above 1300. We had a pretty decent rally today. It's about a $10 rally. Yeah, we rallied from 13.15, 13. It opened at around 13.15, and we're in the 13.20s now. It is on a 9 sell on the 4-hourly time frame though, so that might give you a short-term pullback back to 1300. It might not even be back to 1300 because it's already forming support around 1310. So you might get a pullback to 1310, but then it's looking good for the long term. Here's a daily chart. So once gold could get past 1325 resistance, then it's going to start going back up towards 1350, and then finally there's a major resistance around 1370 and 1380. But once it takes out 1370, 1380, it's off to the races on gold. By the way, I have to do my disclaimer. This is not financial advice. I could be completely wrong. Consult your financial advisor. This is more of an educational channel for trading. And I am not a licensed financial advisor. Alright, so there's a major resistance up around 1380. And then there's a minor resistance around 1325. And then, why did I not? You know, my computer freezes sometimes, and then I lose everything that I drew on the charts. And then when I go live, I'm not prepared because I don't anticipate trading view. Alright, so here, I drew this. This is what it's looking like, what's going to happen here. Because of that inverted yield curve, the markets look like they're going to correct. And I've been saying this for like over a month now. Since the rally, since the rebound on the S&P and the Dow and the markets. So this is the best case scenario for gold. We get a slight pullback, maybe to 13.10, somewhere around there. And then once it breaks back above 13.25, it's going straight up to 13.80. And then I don't know, I doubt it'll break 13.80 on the first try. But that'll be a nice swing trade to the upside for some leveraged gold ETFs. I'll post them in the private room. So let's take a look at the S&P. So the RSI, it's going back up to overbought territory. The MACD, it's eventually going to cross back down to the downside. Now the question is, this is a weekly chart, by the way. So after a TD9 sequential perfect sell here, you could expect a 1 to 4 candle pullback or more. But typically in a bull market, you'll get a 1 to 4 candle pullback. The question is this a bull market still? Or is this entire move right here, is this just a correction to the upside? Is this the giant... Well, you know, 2 months ago, something like that, I was saying this is a dead cat bounce right here, right? To the major support area. And I caught that rally, if you guys remember. But I took profits around this area. And I did not chase the rest of this rally to the upside. Because I went on vacation and, you know, I'm not going to chase it. So now what I'm doing is I put on some positions in some inverse ETFs for this pullback, this pullback from this bear market correction, you could say. So my original call that the all-time high is in is still on the table, and this is still possibly a giant bull trap. It's a little too early to say, but that's what I'm assuming. I'm theorizing, and I could change my mind. And I'll change my mind if this pullback doesn't revisit this major support area, somewhere down here, or anywhere from 2,700 and down. So if it does bounce off of 2,700 on the S&P 500 here, back up, then we could go into a bull market, back into a bull market. But this is all way too early to speculate. Right now, I'm just, I'm waiting for a continuation of the sell-off. Because the bond market, the yield curve has everyone scared. So I like looking at the Russell 2000 as a leading indicator. None of my indicators are on. But this is a daily chart, and it just broke support. Well, it's on, I would say it's breaking support. It hasn't fully broken it yet. But if the Russell keeps selling off today and the rest of this week, the S&P 500, I'm assuming, is going to fall with it. So is the Dow Jones. And, you know, I just have to get this chip off my shoulder. I'm listening to CNBC here in the background for a little bit. It's usually on mute. And this lady calls in, some CEO, whatever. And they're talking about the economy going towards a sharing economy and everyone's gonna share cars. No one's gonna own their own cars. Meanwhile, Uber and Lyft are pretty much in trouble because no one could afford to constantly pay, you know, like $40 or whatever it costs just to get around town on these car services, right? And I'm just thinking to myself, well, the car bubble's about to pop. There's literally 4 cars to 1 person in the United States. Like, literally, there's like 3 to 4 cars per person. Like, the population of cars are higher than the people. Are people who actually, you know, are in the age range of using vehicles. So not the very old, elderly and the young, but, you know, anywhere from 16-year-olds to, like, I don't know, like 60-year-olds. So, no, there's going to be plenty of cars, plenty of used cars. People are going to be fixing their cars, and they're not going to be buying new cars anymore. They're just going to be fixing up their old cars and driving them until they can't. So, I mean, and I'm just saying this because this is like the delusion people are under. And she's talking about, like, the car manufacturers need to talk to Silicon Valley, and they need to get this sharing car economy going. I'm just like, this is what they want. They want everyone to not own anything. They want everyone to live in small apartments and literally not own any assets, not own vehicles, not own homes, not own anything, and to constantly be paying like every day for services. And, you know, they're turning people into cash cows, into slaves, indentured servants, basically serfs. Actually, serfs had it better back in the day because they weren't even taxed. So yeah, I just wanted to rant a little bit about that. It just made me so angry. I like cars, obviously. So I'm looking at the Russell here. Back to the Russell 2000 daily chart. I mean, this looks like it's dumping pretty well. So what else did I want to talk about? Let's get back to the... Let's go to the daily chart on the S&P here. The daily chart was also on a 9 sell. And I saw this coming, the last few videos I was saying that this is going to pull back. And it's finally starting to pull back. Now there is a pretty thick green Ishimoku cloud, which could act as a ramp. And that's why it keeps selling off today. But it's the bond market, which is in focus right now. The dollar is still holding up, surprisingly, but I think it's going to start selling off. I'm not sure why the dollar... Okay, the dollar is probably strong today, only because the market's selling off a little bit. So the first knee-jerk reaction is to go into the dollar. And not just that, globally, Europe and Asia look extremely bad. So check out the 10-year. It is dropping hard. Here's the 10-year Treasury yield. Look at that. It's on support right now. So this is a support area. Now, why is this a support area? So you guys can learn how to trade. There's a lot of highs, and then there's a lot of breakouts. And it's pretty much whenever you see a lot of touches in one area. So let me draw a square. So this area, there's a lot of support. Why? Because there's just a lot of price action. A lot of tops and a lot of bottoms in this area. And then finally a breakout from that area. So that's what creates a support cluster. Or a resistance cluster. It depends where the price is. If the price is above, it's a support. If the price is below, it's a resistance. And that's how simple it is. I think support and resistance areas are one of the most important tools you could use in your toolbox when it comes to trading. So the 10-year, it's coming up on support. It's probably going to bounce. It always bounces. But if it does slice right through it, then you know there's something serious going on. So let's take a look at the yield curve. Currently, it's still inverting. The 10-year is officially below, or the 7-year is below the short-term interest rates. The 10-year is like, it's very close to inverting and falling below the short-term yields. Once the 20 and the 30 start coming in line with the short-term yield, that's pretty much inverted. And the market's going to know. They're going to sell off. And, I've been warning about this for like months now, so it shouldn't catch too many people off guard here. So here's the global markets, just a little overview. I would say it's slight bearish, neutral. The U.S. markets, they're looking better than Europe and Asia. So if Asia sells off and so does Europe this week, in the beginning I was saying that the U.S. will be the last domino to fall. And there'll be a lot of capital flight into the U.S. from foreign markets. But eventually that's gonna stop because of the yield curve and the bond market signaling a correction in equities. See what else I have going on here. I'm going to look at some of your questions. Let's take a look at the FANGs. I know the financials are getting clobbered. So people would think interest rates going up were good for the banks, which they weren't. That's also helping pop. It's also helping to pop the bubble. But low interest yields are good for the banks because it keeps them liquid, keeps them because people are not going to default on their debt. They're less likely to default with lowered interest rates. If the interest rates go up, the banks technically would make more money, but the problem is people are just going to start defaulting, and then the loans are going to go bad on the balance sheet of the banks, which are highly leveraged with derivatives. That's why Deutsche Bank and those others in Europe are already just zombie banks. So what happens is the central bank will come in, print more money, and just buy off the loans from the banks that the banks made that they shouldn't have made. And it's just like 2008, guys. So here's the FANG stocks daily chart. Those are nice. It topped out pretty nicely here. Wonder what the TD says. Let's put on a momentum indicator. MA cross. TM squeeze. MACD, because nothing's saved again. Yes, nice. Look at this. Let's throw on an OBV. I like this OBVV2. So the OBV was neutral, now it's turning down. That's on balance volume. MACD looks like it's going to cross to the downside here. It's rolling over. As you can see right here. And it's in overbought territory on the FANG index. So this is all the FANG stocks. Facebook, Amazon, Facebook, Amazon, Netflix, Google. And you could throw in Tesla and some of the others, you know. And these are the major stocks, and Apple, right? These are the major stocks that are running the stock market up because it's where the most money is. And there's been so many derivatives made of the FANG stocks that when just a handful of stocks, like these 5 stocks or 6 or 10, if they go down, the entire market goes with it. Also, Apple is coming out with news today that they're going to bring streaming service. And that's not going to work out for them very well. It's really not. And they're going into competition with Google, which is good because I don't like neither one of them. So, and Google recently just came out with their own phone. I don't see too many people buying that. Why would you? I mean, everyone knows Google's spying on you, and now you're going to go buy a phone from them? Like... And not just that, Samsung is, I think Samsung is going to be a leader here in cell phone technology pretty soon, because Apple really hasn't been innovating. And I think it's ran its course since Jobs, and yeah. And the culture is just, it's not what it used to be. And I could post a video about that. A podcast, which was really good. This guy used to work at Apple, and he talked about how it changed. He was like an Apple enthusiast, but it's no longer what it used to be. It's more commercialized. It's not like the innovator it used to be. All right, let's get back to the FANG stocks here. So the TD gave me a nice sell signal here. So a 1 to 4 candle pullback on the daily here, unless it's more, right? Because sometimes it's a 9 to 13 candle pullback, and that's very that can happen, right? So here's the 3-day chart, though. 3-day is we had a 3 candle rally here, so the 4 candle can pull back, but then it could continue to rally. Let's take a look at the oscillators on the 3-day chart. So the 3-day is still overbought, though, so I expect actually more downside looking at the 3-day. And then the weekly, oh, look at this. Beautiful. It's a shooting star. So this candle formation right here is a reversal back to the downside. Now the week hasn't ended. The week just started. So by Friday, if this candle is trading anywhere around the price it is today or lower, then I expect some significant a significant pullback or correction to this entire rally on the FANG stocks, on this FANG index, right? So looks like it's going to be a busy week, so I'm probably going to be making more videos. So it's kind of a make it or break it moment. I'm hoping with my trades, so disclaimer, my bias is I'm hoping the market will sell off for the rest of this week and the next month. So we can revisit this support area down here on the FANGs, and same with S&P and the Dow Jones. Now the problem with that is that means that the yield curve is really inverting, and it means we're running out of time. And I'm pretty confident the Fed's going to come out and do something and say something, or they're going to actually start talking about cutting interest rates. So that might be for the short term. That might keep the whole, or the short to medium term, it might keep the markets elevated and stop them from falling. Meanwhile, gold and silver will just take off and the dollar will start tanking at that point. Alright, let's see what questions you guys have. Can Deutsche Bank derivative problem be the next crisis? Deutsche Bank just had a merger and they just did that on purpose, so I don't know. They're like socializing the losses, and they're merging the major banks in Europe. I think Mario Draghi and the central bank in Europe is just gonna keep printing, and they're just gonna buy off all the assets on these private banks and just keep them from imploding. They'll just be zombie banks. But the euro is gonna be devalued. All fiat. This is why fiat currencies are gonna get devalued. What's my gold price prediction if gold back note was introduced? I don't know. It depends. I mean, is it only going to be gold, like as a reserve for fiat currencies, or is there going to be cryptos? Like, is there going to be an SDR and a percent of it's going to be gold? Or are the central banks just going to keep printing and they can't go back to a gold standard? And it's really hard to say. I am confident gold's going to 5,000 minimum. I'm confident it'll go to $5,000. That's what I think. That's where I think it's going to go. Can I be wrong? Sure, but I'm pretty confident it's going to at least 5,000. Now, if gold itself goes to 5,000 USD and the dollar isn't completely hyperinflated away, let's just say it lost like 40% of its value or 60%. That is a very nice, it's a nice way to make a lot of money. And it's a nice wealth transfer. Because, especially if you're holding gold mining stocks and silver mining stocks, because they're going to go up massively. Massively. That's almost a 500% return on just the price of gold. So just the asset, right? Now the stocks are going to go like 100 times that. So that would be really perfect. If it goes to 10,000 gold, that will make me nervous, because that means that the dollar is like, Venezuelan money. It's like Zimbabwe. And at that point, it's like, do you sell it for the wealth transfer and buy assets? Or, I mean, you could always buy assets, right? But I still want some sort of... now, if they back the dollar with gold again, first they're going to inflate it, like, massively. Then they're going to default on all the debt and the promises, and that is the only way the U.S. could go back to a gold-backed dollar. And not just that, the U.S. would have to fix the trade deficit, and I don't know how they're going to do that. That means everyone has to get back to work. Like, I'm talking real jobs, like making things, not sitting in office cubicles, or being baristas, or just salesmen and stock traders, and a lot of these stock traders and financial people are just going to have to get real jobs. Alright, I don't see too many people. It's 12:30. Lunch is over. So if you guys don't know, the stock market, it slows down around noon, and then it picks up in the afternoon. And the last hour, so the first hour of trading and the last hour of trading are like the most volatile, and you see the biggest moves. So I'm going to get back to charting and doing some research for the private members. If you're new, check out mmginvest.com. And also, guys, check out this this podcast, this video. It was pretty good. So I've read all the books Jim Rickards wrote, and he came out with a new book. And he just had a good podcast. Yeah, here it is. So if you go to Greg Hunter, USA Watchdog, Jim Rickards, I don't agree with everything he says, but this guy used to work for, what is it, long-term capital management in the 90s, which almost took down the entire stock market. And then he's somebody. He used to go to the Pentagon and brief, high officials in the U.S. government and warn them about the stock market and the bond market being the biggest risk to the U.S. national security and whatnot. So, I'd listen to him. I think he's worth listening to, basically. All right, guys. Until next time. And smash that like, share my videos. The link's below. Check out all the free chat rooms.